So how do you know when the stock market is going to reverse? In this video, I'm going to go over how to use a head and shoulders reversal pattern and give you a live example of a trade I'm currently in, which is up over $500 in just a few hours. Hey, how's it going? On this channel, you will learn the steps I took to go from trading with a full-time job to trading as a full-time job. So if you're new here, consider subscribing. And today, we're going over market reversals. So the basic idea behind a market reversal is that the simple fact that the trend is changing. And so that can be going from an uptrend to a sideways trend, or an uptrend to a downwards trend, or any other kind of trend change. And there are key factors to determining and being able to spot when this is going to happen. With the simple idea of an uptrend causes higher highs and lower lows. And then when you see that shift to making lower lows and lower highs, that is essentially a basic reversal of going from a upwards trend to a downwards trend. Reversal patterns are just easy ways to recognize when these reversals are happening. With this trend that I just drew right here, it's going from an upwards trend to a downwards trend. And this kind of trend change actually makes a classic pattern called a head and shoulders. And so that is shown by the three peaks up here. This is one shoulder and this is the head. And then we have on the right side the other shoulder. And the idea is as a top forming pattern because it forms the top of this trend right here that we drew, and it signals that a reversal could be coming, and you can use this pattern to spot these reversals easily. How a head and shoulder works is it has the two shoulders and the head, and between these two shoulders it makes what is called a neckline. And that can be drawn by just drawing a line between these two peaks right here. And that is where the stock or just the market will create a support level. Once it breaks this neckline over here that is formed by that support line that we can draw previously, is it signals that the reversal is confirmed and that it is likely that the stock is going to start on a new trend. And in this case, it would be a downtrend. Another quick way we can confirm, or if you missed the initial break of that, you can see that on the right over here, it came up and tapped that neckline again, and that neckline now was resistance level. And you can see that the stock began to sell off from that point. Again, the main idea behind these patterns is that it's just an easy way to recognize that the stock started to make a lower low here, and then it also made a lower high here, which is showing you that the stock is not in that same trend before of making higher highs and lower lows, but it is now starting to make lower lows and lower highs, which gives you a key insight that the stock could be reversing now and changing the trend. So if you were betting that the stock was going to go up and you had a previous position on, this would be a good time to close out your position with the idea that the stock could start a huge downtrend now, and you don't know when the bottom of that could be. So to give you a more concrete example, we're going to look at the NASDAQ on a 2-hour chart. And in the beginning, you could see that this chart was trending really well with making higher highs and higher lows. And even as the changes in the chart weren't getting as significant, the lows weren't getting that much higher and the highs weren't getting that much higher, it was still in that trend. And then as we start to get to the right side of this, we can start to see that a head and shoulders started to form. And with that neckline being about here, we can see that the chart went from making those higher highs and higher lows to about here, it started to make a lower high. That shows us that the trend is beginning to reverse. And we don't know that the trend is going to change from a upwards trend to a downwards trend as sharply as it did here. But the idea is that we know that the trend is going to change, or it's possible that it changes. It could just start doing a sideways trend. And if we had a position on, maybe we wouldn't lose any money. The idea is that the potential for the upside gains that maybe we were looking for before, when the stock was more on the left side of the chart, they aren't there anymore. The risk is a lot heavier to the downside, and so we want to trade accordingly to that by either closing out our positions that are betting that the market is going to go up, or putting positions on betting that the market might go down. For this chart, as you see, once it broke that neckline, compared to the drawing I had before, it never came up and tapped that neckline as resistance. It just sold off really sharply. And if we had a trade on that was betting that the market was going to go long, at this point we would just want to cut our losses when we saw it break this zone. Or if we saw that we could have just put a bet on that the market was going to go down. One thing I want to stress is don't trade these patterns alone. They are strong patterns and can give good reversal signals. You want to have them as confirmation with other factors. You never want to trade with just having one thing to tell you that the market is going to reverse. You want to have a few things that you generally use telling you that the market is going to reverse. With that being big resistance levels or maybe some moving average indicators, it doesn't matter what you use, but you want more than just the pattern alone, because it'll make your trading strategy a lot more profitable and consistent. Now, let me walk you through a trade I'm currently in using the head and shoulders pattern as a catalyst. Now, what I'm doing is a little bit more advanced than just looking at the chart and seeing the head and shoulders pattern. What I'm actually doing is using the head and shoulder pattern on a inverse asset of what I'm trading. What I mean by that is the chart I have right here that you can see this head and shoulders pattern on is called the VIX, or the volatility index of the market. And all it does is track the volatility of the market. But essentially how it works is if the market goes up, the VIX goes down. And if the VIX goes up, the market goes down. So I think the market is going to go up, and I see this head and shoulder pattern in the VIX, indicating that the VIX has a high chance of going down, and hopefully going down all the way down here to back to where it was before. That will give a strong catalyst for the market to go up. When I got into the trade, the VIX was trading at about this point just a few hours ago. I saw this pattern about to break, and even though that I don't know that it's about to break, I was seeing strong indicators in the actual asset that I was trading, which was the stock market, or the Dow Jones Industrial Average. And this is just a catalyst to help confirm my trade idea, and that the idea that the stock market will go up and it's worth betting my money against that. To show you what that trade actually looks like on the asset that I'm trading, here's the Dow Jones Industrial Average. And this is where I'm actually betting my money on. I'm not betting my money on the VIX going down. I'm betting my money on the Dow Jones going up. That head and shoulders pattern in the VIX was just a catalyst to help me confirm that I think that this asset, the Dow Jones, is going to go up. I only put this trade in a few hours ago, and with that head and shoulders pattern barely beginning to break, I'm already up over $500 on this trade over just the last 3 hours. Once that VIX starts to really come down from that head and shoulders pattern, this market right here will start to skyrocket up here, and I will be able to get the full benefits of that head and shoulders pattern falling and the Dow Jones breaking out of this resistance level that I have here. And that's more of what I'm basing my trade off of. The main idea here is that I'm just using the head and shoulders pattern with my trading strategy. It isn't my trading strategy alone. You want to use it as a catalyst, not as the key ingredient to your trading strategy. I'm sure you could base a trading strategy around head and shoulders patterns, but you want to have multiple factors going into a trading strategy. And when you execute your trades, you don't just want to have one reason why you're getting into a trade. It usually doesn't make for a high probability chance of success. Hey, thanks for checking out this video. If you want to learn more about the stock market and how to do trades like I just showed you, make sure to hit that subscribe button. And if you have any questions on the trade I just showed you, or any reversal patterns in general, make sure to ask them in the comments below. And as always, if you liked the video, please hit that thumbs up.